Hey guys, it's Loy here, and this is another video for Crypto Insider. In this video, I'd like to talk about the S&P 500 US equity market and why I think another minimum, a correction or a potential crash is still coming. I remember I made a video about two months ago saying that it's coming soon, but I mentioned that I do not know exactly when or like or where the top was, and that is still true. But uh, recently, we might have a potential catalyst for this crash because most stock market crash relies on some sort of catalyst. For example, the one in March 2020 was obviously the COVID crash, which brought down the market for 4 weeks, and the crash was about, I don't know exactly the size, but maybe 40% off the in terms of points. And yeah, so recently there is news coming out of China. There's a company called Evergrande, um, and so Evergrande is like a property development company, a very big one, and they are in 300 billion US dollars in debt, and yeah, they're going insolvent right now. So 300 billion, it's a lot of money, and I'll give you some comparisons to make. In 2008, Lehman Brothers uh, collapsed with a 600 billion US dollars in debt. So there you have it. It's quite similar in terms of size and scope. So, this is not something you should ignore. And yeah, this could potentially be the catalyst that we are looking for in terms of a market correction. And let's have a look at the technicals to see if the technical also lines up with the potential crash. So let's draw a trend line connecting most of the support here. So you can see this, it gave support here, 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 and obviously here. And if you notice, we broke this trend line today or even Friday. And so depending on where the market closes in the next couple of days, it could snowball and correct even further. And let's have a look at the weekly time frame, and let me draw a Fibonacci retracement to give you an idea of how deep we can go, how deep we can correct or crash. So in terms of size, anything that crashes anywhere between 23 to 38% fib retracement is considered more of a correction. So first line of support is obviously 4,000 and then 3,600. But if we drop more than 38%, it's unbiasedly considered as a market crash. So we're looking at 50 to 61% retracement. So in terms of the equity market, the reason why we look at the equity market when we are a crypto trader slash investor is because uh, everything is correlated, and the equity market definitely affects the crypto market, and I'll explain why right now. So let's go back to the daily chart, and you see this panel here. This is the Bitcoin price in a line chart. Okay, so let's go back in time to March 2020, the crash, sorry, and it affected Bitcoin. So when the market started to crash, Bitcoin was the top was about, this is closed price, so the actual high was actually like 13 and a half or something. Not 13.5. The 13.5 was here. Like this is the daily close price. So keep that in mind, okay? So it's not the daily highs or lows. So it dropped from 10,000 to a daily close of 4.7, but actually went as low as I think it was like 3.6 or 3.7. Every exchange was slightly different, but you get the idea. When the equity market crashes, Bitcoin also crashes, and you might say, okay, this is probably just once off. There can't be any correlation because the crypto market is decentralized, all that crap, but that's not true. So let's look back even further to 2018 correction. This was not a crash, but this was a significant correction. The correction started in October 2018 and it ended in December 2018. And no surprise, also Bitcoin crashed from 6,500 to about 3,000, and the bottom was also roughly near the bottom of. Well, Bitcoin tends to always bottom sooner. See that? It bottomed sooner in March 2020, and it bottomed sooner in December 2018 at 3,000. And let's even look even further. So there was another correction, not a crash, started in January 2018. And, no surprise here. Bitcoin also corrected from 11,000 to about 7 or even 6.9, somewhere there. There you go. That's significant as well. So there you have it. There is a correlation between the stock market crash and the Bitcoin crash. There is, however, the opposite is not true. So what I'm trying to say is the equity market bull market does not really affect the bull market of Bitcoin. So they're mutually exclusive in that ways. But the reason why they are correlated when it crashes is because when one sector drops, all these big hedge funds tend to sell off their other assets like gold or cryptocurrency to offset their losses. So that is the reason why like the Bitcoin it bottomed out sooner than the equity market. And yeah, the debt from Evergrande is 300 billion. That's a lot of money because Lehman Brothers was 600 billion. So you know, having said that, we must take note of this. You cannot be complacent in terms of the equity market because it only takes some sort of catalyst like this to just push to to just snowball into something even bigger, and big hedge funds or investors they lose confidence in the market and they just they sell off because they need to report a profit. Most hedge fund or super funds they need to report a profit or else they lose getting new customers. That is, it's a cutthroat industry and that's how it works. So if there's usually any sign of fear or panic selling, usually these big companies, hedge funds, get out first. So there you guys have it. That's why I think that there could be a stock market correction slash crash coming soon, or even as soon as the next couple of weeks, or if not now, it's just gonna be postponed. So yeah, every market crashes. So this is inevitable. So if not now, it will just keep going a bit higher, and the crash will just be delayed. So what I'm trying to say is, this is coming regardless of when. It's not a matter of if the market is going to crash. It's a matter of when. And when is very at least in terms of the equity market, it's very hard to predict. So that's the reason why I don't recommend anyone short the equity market. This Knowing this is very important for crypto investment because you do not want to buy crypto or hold any crypto when the equity market is in a bubble or when there is uncertainty, and you want to buy low and sell high. Essentially, that is my main strategy, and literally makes no sense to buy high for shares or even crypto right now. So that's the reason why we haven't bought any crypto since we sold it in as early as March, April, and May. So there you guys have it. If you like this video, please give me a thumbs up. If Please do subscribe if you want to see more videos like this, and remember to click on the bell icon so you get notified when I upload a new video. Thanks, and see you guys in the next video.